This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 155 is brought to us by Bybit. Now, there's probably a different promotion coming out on Bybit every single day, and lately, a lot of them have been dealing with very small cap tokens or brand new tokens. And if you simply trade them a little bit, you enter for the chance to win a lot of them. And then from there, you can simply keep trading them or hang on to them or exchange them for stablecoins. Now, sure, this isn't for everybody, but it is for some of you out there for sure. And you're receiving these tokens directly from Bybit, so you know it's safe. But regardless, if you want to enter very large trading contests or sweepstakes or trade shitcoins, or simply want a well-capitalized exchange that does not have ties to the United States so you can be left alone and be able to trade and also buy your tokens on the spot exchange, the choice is becoming easier and easier every day because with Bybit membership has its rewards. It is the 10-Minute Contrarian Podcast, and we have not done a banking episode in a while, and it is high time we did. Now, what I love about my contrarians is you guys are action takers. My Forex audience, far less so, but when I'm talking to you guys, I pretty much know that you guys are taking some of these concepts and putting them into play. Problem is, when it comes to banking, I think there's a lot less action taking being done here than almost anything else we talk about, which is really weird because, as you guys know, the last few episodes and probably the next few episodes ahead are going to be focusing solely on defense. And I really do think that people are taking less action here than they are anywhere else. And that is crazy. This is really a symptom of things being good for a long time and you guys becoming complacent. And nobody wanting to put forth just a little bit of effort to make sure that no matter what happens, their money is going to be safe. And simply throwing it all on the blockchain is not a safe option for 99.99999% of people. You know, as of right now, I do know a few people who just specifically live off of crypto, but it's not an easy lifestyle. You know, you really have to want that. For the rest of us, we rely on banks, and we rely heavily on them. Yet nobody ever seems to want to vet their banks and their entire banking setup. And these are the same people that when these banking crises happen, and then your government decides not to step in, they're the ones that get completely destroyed. And your heart goes out to them. You know, this is their life savings. They put in an excessive amount of labor just to accumulate the money they did. But in the back of my mind, I'm also like, God, dumbass. I've said it so many times on this podcast. Money and health are the two things that every single person cannot afford to be dumb about. So if you need a good starter pack, if you need a good goal to reach, a good place to where you can say, yes, I am finally at level 1. Let me tell you about my friend here in Mexico. I'm going to be in Mexico for another week or so. Then I'll be away for about 5 months, and I'm probably going to come back. I really like it here. And I have good friends here, and one of my good friends here is not a contrarian investor, you know, just a regular guy with a regular job. But he has a banking setup that I think everybody should have, but almost nobody has. And it's quite simple. All right, so he's an American citizen, and his main bank is TD Bank, which is a Canadian bank that also has branches in the United States. Now, almost every Canadian bank in existence, you know, all 6 or 7 of them, is very strong and very solvent. You know, when they produce the top 50 banks in the world, almost every Canadian bank is on there somewhere. You know, American banks are not. And if what happened before with the trucker protest and Trudeau and all that concerns you, you know, I think TD would be fine because the American bank branches really weren't affected by that. So whether it was intentional or not, good on him for having something like that as his main. Now, he lives in Mexico, and he has residency here, and he went and got a Mexican bank as well. His bank is BBVA, which is a large Spanish bank that has branches in Mexico as well. And so not only does he have a second bank in a second jurisdiction, he also has a secondary currency he can use too, and a fairly strong currency at that in the Mexican peso. And then he also has Cash App, which is a Fintech app where he can do all sorts of different things. And he has Cash App hooked up to both of his banks. And then finally, I did orange pill him at some point, and he does hold Bitcoin now as well. This right here, if you can just manage to have a similar setup to what he has, will put you in elite company when it comes to having the proper tunnels dug out in your banking system. You do not have to take it as far as I take it. I actually recommend you don't do that. Now, he doesn't have any precious metals. He doesn't own any stocks. But I'm telling you, this simple setup he has is very, very top tier. And if you can simply get here, I'm not saying you can sit back and relax, but you can at least say you've done your part more than most people have. And I'm serious. This is every bit as important as the crypto episodes and the precious metals episodes and the energy episodes we have on here. But it just doesn't hit people in the feels the same way, and there's a little bit more effort involved, and it's always good until it isn't. And so that combination of those three things is why I think a lot of people just don't take action. But I mean, just the peace of mind alone is tremendous here. But we're not going to stray too far from the title of episode 155. The one part of his setup that I really want to focus on is that Cash App part, the Fintech app. Now, Fintech apps are extremely popular now. A lot of you probably have at least one. And I love the functionality they bring. We didn't have this back in the day. But the setup that I've always said before that you should have is one main bank that you use that has a lot of great functionality and it's large and it's capitalized and you feel safe with it. Then a secondary bank somewhere else as a tunnel where you can push money over to should you ever need to. And then at least one functional bank or fintech app in the middle somewhere that you're not going to keep a whole lot of money there, if any, but it performs a certain task that could be very useful. Like, currency conversion or crypto conversion. Or maybe it helps build your credit score or it gives you some type of reward points, something which is very useful that a normal bank may not provide. If you can have those things and then hold some crypto somewhere, I'm not saying you can relax, but I'm saying you've at least reached level 1. And if you guys have not reached level 1 yet, you need to do that as soon as you can. We'll talk about that in a moment. Now, the one remaining thing I'm trying to get my friend to do is that whole thing we talk about, burning the candle at both ends. Like, I don't spend money unless I'm getting paid for it. So unless I'm getting travel points or hotel points or the CRO token on my Crypto.com debit card, I am always getting paid for spending money. And I think if I can get him there, he'll be sitting pretty. But we'll see. But here's the problem with a lot of fintech apps, and most people, even you guys I'll bet, don't realize this, is most of them have to be connected to a bank somewhere, which means your money is also connected to a bank somewhere. Now, younger people, I'm mainly talking to you here because your life is almost completely digital now. Some young people don't even have banks. They use these fintech apps instead, which means a lot of them have the majority of their money and their liability in a very small, maybe even undercapitalized or insolvent bank and not even realize it. And people have really gotten burnt by this. There was a big story recently. I don't know if you guys know about a fintech called Yotta. I think it's YOTTA. This was a big one. This just happened. Now, the concept of it is a bit goofy. If I recall, it's a fintech app, and you can hold your money there, and any kind of interest you get, or whatever the case is, goes straight to a lottery ticket. So, like, you're pretty much getting free lottery tickets, and who knows what could happen. It's the lottery after all. Yeah, and that's going to appeal to some people for sure. And major financial YouTubers like Graham Stephan and Andre Geek were advertising this. I don't listen to Graham Stephan, but I do catch some Andre Geek videos because they can be very, very good. I've actually used a couple of his as research for episodes of the 10-Minute Contrarian podcast. But if there's a flaw with these guys, it's that they tend to promote a lot of things. And when you're promoting this many things, the due diligence you're probably doing is not what it should be. You guys know what my thoughts are going to be on this. I barely promote anything. But the things I do promote, I have gone over with a fine-tooth comb. And just to toot my own horn here, the three main things which I promote now, Bybit, Blueberry Markets, and Markets.com, have all grown a lot since the day I started promoting them for the first time. And because they have treated their customers very well, and if you do that, financial YouTubers, take note, if you simply do that, good things will happen. And to promote a fintech app that gives you lottery tickets, I don't know where the draw is here. I don't know if this is ever something I would want to stake my own reputation on, but I digress. What ended up happening here is, like most of these fintech companies, they are connected to a bank. It could be big, could be small. We'll go over that in a moment. But Yada was connected to a very small bank, and they also have this processor that connects, point A to point B. And the processor decided that they didn't want to work with the bank anymore. And now everybody who uses Yada has their funds trapped right now, with no real solution in sight. And I was watching a further video on this. CoffeeZilla had a dedicated video to Yada. And CoffeeZilla is a giant channel who focuses mainly on scams. And he was interviewing people that had 5, sometimes 6 figures trapped in this app. Now, if you can put 5 or 6 figures into a fintech app, you've probably earned that money somehow. You're probably, of above average intelligence at the very least. But what a dumb thing to do. You're going to throw that much into a new fintech app, which is connected to a bank you've probably never heard of? It's wild. I'm telling you, contrarians, even people like this are making mistakes like that. When it comes to finance, the things we are aware of and the solutions we know about make us absolutely elite, top-tier elite in the financial world. All right, so it's time to start acting like it. Get your banking set up in order, and if you're using fintech apps, use them for the functionality alone, unless they're connected to a very strong bank. So what I did is I looked up the top 10 fintech apps in the world. Now, some of them are not really meant to have your money stored there, so we'll skip those. But as usual, I will do some of the legwork for you, and let's go over these apps and see which banks they are connected to. Now, the number one fintech app in the world, does anybody know what it is? It is PayPal. And if you've ever done e-commerce in your life, the number one rule of PayPal is never keep your money in PayPal. They love to fuck with it. Now, hopefully, none of you have a whole lot of money in PayPal and are using it as an actual bank. So I'm not going to really worry about that one. Number 2 is Venmo, which does a lot of the same things. Don't use Venmo as a bank. Use it for what it is there for. And then number 3 is the aforementioned Cash App. Great app, in my opinion. Bought out by Block, which used to be known as Square. So you have that going for it. But what banks are it connected to? Well, let's see. Cash App is backstopped by Sutton Bank and Lincoln Savings Bank. Oh boy. Now, not to take anything away from those banks, you got to do your research and see, how solvent are they? How capitalized are they? But how many people are actually doing that? How many Cash App users even know that there's even a bank behind all of this? How many of you, contrarians who we all know better, how many of you even were aware of this? And how many of you knew which bank it was? And how small and unheard of these banks are? This is the same thing that happened with Yada. They were connected to a bank called Evolve or something like that. A lot of times when these things are first coming up, they'll just take whatever bank will work with them because there's so few out there that want a piece of these things. So again, Cash App, great app. Use it for the functionality. All right, now number 4 is Robinhood. Now this is the opposite of what we just saw with Cash App. Let me go to where I found this. Check this lineup out. Robinhood is backed by banks such as JP Morgan Chase, Goldman Sachs, HSBC, Wells Fargo, Citibank, Bank of Baroda, which I don't know what that is. But what a difference one fintech app makes to another. Far be it from me to say good things about Robinhood, but this is very, very impressive. Now moving down to number 5, we have Acorns, which is a saving app. So this is an app to where you would want, if you're going to use it, you're going to want to have money on there. But their banks are, there's Lincoln Savings Bank again, that better be good, and then the National Bank of Kansas City. Okay, be careful out there. Number 6 is Chime. Chime is an entire system to where people with bad credit can work on improving their credit, and they have a debit card and a credit card. So it's a nice little system. Also keeps track of your spending and all that. It's really nice. But its banks are the Bancorp Bank, which almost sounds Mexican, and then Stride. Now, have you heard of any of those two banks? Again, the probabilities are that everything is going to be fine here. But the probabilities of banks collapsing, especially smaller banks, or having issues with the provider which connects point A to point B, go up when you're not a large established bank. All right, going down the list, number 7 is Mint, which Mint's been around forever. I think they just kind of track things financially for you. We'll skip that one. Number 8 is SoFi, which SoFi has had their problems in the past, but is still a very, very large bank, so I would feel okay with that. Number 9 is Coinbase, which doesn't really have much to do with what we're talking about. And then number 10, a lot of what I have mentioned have been American fintech apps. Number 10 is Revolut, which Americans are not allowed to use. But is very, very popular. When I'm out with nomads from Europe and it's time to pay the bill, 9 times out of 10 that Revolut card comes out, which is great. And for what it's worth, they are backstopped by the Bank of Lithuania and the European Central Bank, ECB, Christine Lagarde, like that bank. So that probably bodes well for safety. For regulations going forward, I'd be pretty skeptical. The ECB doesn't exactly love crypto, but at least with the top 10 fintech apps out there, this is what you're dealing with. And there are literally thousands, and they all have to be connected somewhere. So you need to really pay attention because also this week, I'm not sure if you saw this, the FDIC came out with 63 American banks, which the headline says are on the brink of insolvency. That's not quite what's going on. Their numbers would show that they are getting close, but these are unrealized gains. So, as traders and investors, we know what unrealized gains are. If your account's down, you're not officially down until you sell. And some of these banks are down pretty bad because of interest rates, because of treasuries going down. But they're not completely screwed unless they have to sell those off. Now, the problem is with those treasuries especially, they're going to have to sell them at some point. They're going to come due. Now, this whole problem can easily become exacerbated by a big drop in the economy or a real recession because these banks are tied to businesses and a lot of businesses fail during this time too, and then this waterfall effect happens. And again, if you guys know anything about the banking system right now, and most of you do, it is already on very shaky ground. So solutions-wise, the best thing you can do is look into your bank. You can start with the Fitch ratings. Now, Fitch and Moody's and those guys get a bit of a bad rap, but this is a good place to start. Almost every bank in the world will have a Fitch rating. And then you can further research solvency from there. Again, I know this is a step a lot of you are not going to take, but don't say I didn't warn you. I have done the legwork on this. My top 2 banks in the United States are very large, very well capitalized, solid Fitch ratings. And as far as banks I have in other countries, they're either the top bank in their country or in the top 3, and their Fitch ratings are solid, at least for that country. And then I have one bank, which is kind of a Mickey Mouse bank, but I don't keep any money in it. Again, it's just there for functionality. Put the money in, do what I have to do, and take the money out. But I guess the moral of this episode is every single place your money goes, whether it's a bank or a fintech app or a crypto platform, or where you buy and sell stocks, you should be vetting these places closely. It's not going to take a ton of time to do, and there's always a chance that you may be unpleasantly surprised with what you find, and you may need to make further moves. But we are financial preppers here at the 10-Minute Contrarian Podcast, and you cannot be a financial prepper if external factors which you have no control over have the ability to take you down. So know what you're investing in. More importantly, know exactly where your money is, and make sure that even if those places are strong, that you still spread out in order to avoid one of them from taking you clean out. It's actually quite simple at the end of the day. Because when you are prepping financially, we're not prepping for the good times, for the prosperous times, like we're still in right now, and everybody's fat, lazy, and complacent. We are prepping for the opposite of that. And if it happens, we will be fine. If it doesn't happen, we will still be fine. But make sure you win either way. And if you happen to be the only person you know that, God forbid, actually does some research on the bank they're a part of, then this is a good thing. This does not make you crazy. It makes you wise and early.